An SEC whistleblower said the agency has illegally destroyed thousands of documents, letting financial crooks off the hook. Today I want to talk about how the SEC is complicit in these crimes, but why it's all about to come crashing down. So stay tuned and let's make some money. And I want to dive straight in with the key information. So, Rolling Stone has posted this article saying, is the SEC covering up Wall Street crimes? Now, the eagle-eyed amongst you may notice this article is from 2011, however, it's still just as relevant to this very day. It says, imagine a world in which a man who is repeatedly investigated for a string of serious crimes but never prosecuted has his slate wiped clean every time the cops fail to make a case. It says that is exactly how the SEC has been treating the Wall Street criminals who created the global economy a few years back. For the last 2 decades, according to a whistleblower at the SEC who recently came forward to Congress, the agency has been systematically destroying records of its preliminary investigations once they're closed. By whitewashing the files of some of the nation's worst financial criminals, the SEC has kept an entire generation of federal investigators in the dark about past inquiries into insider trading, fraud, and market manipulation against companies like Goldman Sachs, Deutsche, and AIG. With a few strokes of the keyboard, the evidence gathered during 18,000 investigations, including Madoff investigations, has apparently disappeared forever into the wormhole of history. It says many of the destroyed files involved companies and individuals who would later play prominent roles in the economic meltdown of 2008. 2 MUIs involving con artist Bernie Madoff also vanished. So did a 2002 inquiry into financial fraud at Lehman Brothers, as well as a 2005 case of insider trading at the same soon-to-be bankrupt bank. Now, I'm sure the exact same thing is happening to this very day. I'm sure investigations into Ken Griffin and many other major employees at these major institutions are simply being wiped off the face of the earth and everything being forgotten and forgiven. Real crimes are being committed, but because it's not being fully investigated, the slate is effectively being wiped clean. It says the destruction of records by the SEC is something far more than an administrative accident or a bureaucratic mess-up. It's a symptom of the agency's terminal brain damage. It is somewhere along the lines, those at the SEC responsible for policing America's banks fell and hit their head against a big pile of Wall Street's money. We know that the SEC is being paid off by Wall Street, and that's happening still to this very day in the case of the market manipulation happening to GameStop and AMC every single day. That's why the SEC aren't going after Citadel, and that's why the SEC aren't going after synthetic shares that are being created every single day, even though it's blatantly staring them in the face with 100% utilization that's been the case for nearly a few months now. Even though the manipulation is blatant and it is obvious, the SEC still aren't investigating because they're being paid off by these Wall Street funds. However, these Wall Street funds can't pay off the SEC when they've been margin called and when they end up being liquidated and forced to sell off their long positions and forced to close out of their shorts. And those liquidations and those margin calls are getting closer and closer. Bankers have just stuck the biggest discount this year on a gaming buyout loan. It says a bank club led by Morgan Stanley has posted the steepest discount on a leveraged loan so far this year as Wall Street institutions struggle to lock down buyers for risky debt amid mounting recession fears. This $500 million deal is now being offered at 85 to 86 cents on the dollar, aka Morgan Stanley has just issued a loan for $500 million, and you can now buy this loan from them for only 85 cents on the dollar because they're that worried that they won't receive the cash back. And it says that marks the lowest discounted price seen in 2022, coming just weeks after JP Morgan offered 89.5 cents on the dollar for a $1.5 billion leveraged loan. Secondary loan prices have fallen to the lowest level seen since August of 2020. And new issuance has also slowed to a crawl as banks delay debuting deals that could result in losses. And guys, if you haven't already, be sure to sign up to Moomoo using the link in the description below to get 10 free stocks worth up to $25,000 and a guaranteed free share of Lucid on top of that. Moomoo is very easy to use, it's incredibly customizable, they have tons of technical indicators and advanced charting tools. From Moomoo's latest customer agreement, they officially state they do not benefit from your order flow, and they do not sell your order flow to market makers like Citadel or to clearing houses like Apex Clearing. They actually clear their trades themselves through their clearing broker Futu Incorporated, which does also not sell your order flow. And on top of that, the Federal Reserve is now finally admitting or finally warning that entrenched inflation now poses a significant risk. The minutes of the US Central Bank's June meeting also showed that policymakers now support raising interest rates to the point at which economic activity is restrained, with the possibility that they could become even more restrictive if warranted by the data. aka the Fed is saying they will continue to raise interest rates even if it crashes the economy, and even if that crash happens, they will still continue to raise interest rates if needed. Jerome Powell said a US recession is now certainly a possibility. He reiterated that message last week on a panel with other central bankers, when he warned that a failure to restore price stability would lead to an even worse outcome for the US economy. And he said the process is highly likely to involve some pain, but the worst pain would be from failing to address this high inflation and allowing it to become persistent. And there's even more signs coming out that the economy is crashing and that the economy is already in a recession, and these companies are now finally responding to it. Twitter has just announced that they've laid off 30% of its talent acquisition team, and on top of that, Shopify is also to start layoffs per Business Insider. Therefore, it's not just these crypto companies or even these tech startups that are struggling and starting to lay off staff, but it's even well-established tech companies like Shopify and like Twitter. Unusual Whale's tweet is saying job cuts have surged in June, up 57% from May and 59% from June of 2021. Job cuts are now accelerating at a massive rate. We're seeing more and more cuts through March, April, May and June so far, and I expect even more in July. And it seems the next victim of the current crypto crash could potentially be Robinhood. As Hellspawn Crypto tweeted, he said Robinhood is crypto insolvent. People cannot withdraw their Bitcoin out of Robinhood. He then posted this screenshot of somebody trying to withdraw $1,000 of Bitcoin from their account, which does have $1,100 available, saying error. Your account is restricted from withdrawing crypto at this time. This seems to be another exchange halting withdrawals, and this time it's not a smaller exchange, but in fact it's Robinhood themselves. You may have also seen this tweet or this email from Mt. Gox suggesting that Bitcoin will soon be distributed to the creditors as a result of the lawsuit. These repayments are expected to be made in August of 2021, and that means 137,891 Bitcoins will soon be distributed to lawsuit creditors. When these Bitcoins were stolen back on the 24th of February 2014, Bitcoin was trading for around $240 per coin. That means there's 137,000 coins that are about to be distributed to regular people that will likely sell these Bitcoins all at the same time, crashing the market once again, because the last time they had these coins, they were only worth $240. When 137,000 Bitcoins are dumped onto exchanges all at once, it's likely that Sam Bankman-Fried's $2 billion won't be enough to backstop the exchanges. 137,000 Bitcoins is $2.7 billion on its own, let alone the thousands, if not tens of thousands of people that will be selling their Bitcoin when the price continues to crash. As I've said before, the further crashing of the crypto market is likely to also impact onto the stock exchanges, considering just how heavily correlated the Nasdaq and the price of Bitcoin actually are. Many funds that are invested in crypto, even some of the largest funds like Virtue, Citadel, Susquehanna, and a number of others, will end up losing millions when crypto crashes further, and therefore they'll be forced to sell off their stocks so they don't experience a margin call. Selling off more and more stocks will continue to crater the stock market even further, again causing further liquidations. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell because that way you'll be alerted when I upload a new video. Cheers.